How many participants are there?
We are live now. We can start.
We can start.
Yeah.
Please, Subhash, go ahead.
Yeah. Good morning, everyone. This is Subhash, Senior Technical and Derivative Analyst at HDFC Securities. I am joined by my colleague Vinay Rajani. Hi, Rajani. How are you?
Yeah, Subhash, thank you. I'm fine, absolutely fine, and welcome you all in this fortnightly market webinar.
Yeah, welcome you all. So, this webinar will start with Vinay. He will be giving a presentation on the global indices and also the trends of the GIFT Nifty and the technical view of the market for the next fortnight. And he will hand it over back to me for the derivative view. And then we will ask you questions so that you can get the answers on your questions. So now over to Vinay.
Yeah, thank you, Subhash. So friends, I'm here to talk about the technical developments on the Indian equity markets. We will talk about the global markets update also and the latest news also and how different sectors are looking technically and which sectors can do well, which sector can underperform and how our Nifty and Bank Nifty are placed and which are the crucial important levels to watch out for, whether we'll be able to come out from this choppy phase that we will discuss, and we will try to come out with some conclusion which will help us to know the trend of the market for next fortnight. So it is going to be very important session. So we will be sharing both technical and derivative view. Subhash will take over this derivative part and I will take over the technical part, and we will combine our view together and we'll come out with the conclusion strategy for the Nifty, Bank Nifty, as well as the stock specific, sector specific approach in the next 15 days. So without much ado, I am starting my presentation. So first of all, the important thing is that GIFT Nifty is up by more than 300 points overnight. So yesterday there was some announcement in the US market. So Supreme Court, the actually rules against the Trump's tariffs, which were imposed by the government on different countries. So Supreme Court has gone against that, and that has led to the jump in the GIFT Nifty, especially where we were struggling from the tariff announcement, negative announcements. So that was a relief for the emerging as well as the global markets from the US side. And after that, Trump signs executive order of 10% global tariff hours after Supreme Court this ruling. So it is considered, market is taking it positively because though we have seen some Indian US market trade deal happening before that on 3rd February, but so even after that we have got this news which were much awaited, and it is positive for the global market. But as Trump said that it might he has got some options to impose it in a different way. So volatility will be there, choppiness will be there. It is not like we are opening higher and continuously rising. We need to see whether the important crucial resistances are getting surpassed on closing basis or not. So higher opening could be there, but sustainability will be an issue. We have to see that and we have to review that whether it is surpassing the resistances in Nifty on closing basis or not. So it is going to be very volatile market, and stock specific, sector specific approach is already there. So we will try to come out with the conclusion on that. So starting with the technical developments on the Nifty. So this is a daily time frame of the Nifty. And as we can see over here, this is the candle which is on the budget day. So on 1st February special session was held. And on that day, we saw Nifty falling by more than 300 points. So this was a clear cut breakdown. But even after getting this breakdown, this low of the budget day was not breached. And on the next day itself, we saw recovery in the Nifty. And one day after that, we got the positive news of India-US trade deal. So on that day, on 3rd February, Nifty opened up by more than 1200 points, but could not sustain at higher level. So it was almost near the all-time high. 26,343 was the high on the this trade deal announcement day. But somehow we saw a profit booking from the higher level. We could not take out the previous all-time high, and Nifty end up with the more than 300 points rise. So this was the another opposite move on the 3rd February after budget budget session, and after that we can see that it is going up, coming down, going up, coming out. So there is no directional movement in the market. There is no clear cut trend emerging on the markets. So it is taking out the resistances of 20 days moving average, 50 days moving average. Again, it is breaching that. Again, it is going up that. So we can say that we are passing through the choppy movement. We are not in a directional uptrend or directional downtrend. But yes, stock specific, sector specific stocks are still performing well, and some stocks are still trading at its 52-week high, while mid caps and small caps are clearly struggling here. So the important things to note down over here is this is the pink line you can see, which is nothing but the 200 days moving average for the Nifty. Now, right now, this 200 days EMA is placed at 25,240 odd level. So it is a crucial support. And in last 7-8 session, we can see that Nifty is not breaking this 25,370 support. So this was the swing low, which was registered 4-5 session back. Yes, day before yesterday on Thursday, when we saw a 500 points correction from the high, and that day also it protected the level of this previous swing low of 25,370. And yesterday also the low was similar to that. So 25,370 is the immediate support. Unless we see sustainable below level below that, we can expect some up move in the market. And since Gift Nifty is up by more than 300 points, we may see a opening on the Monday near around this swing high of 25,800, 25,850. But this is the crucial resistance we need to watch out for. If this level is taken out, which exactly precisely placed at 25,885, then there will be an up move towards the 26,000. So we have decided, and we have come to the conclusion that 25,800 to 26,000 is a very important resistance for the Nifty. If Nifty is able to sustain about 26,000, then we can expect a new all-time high about 26,370 odd level. So yes, we are passing through the choppy phase, and it may continue. But once we cross 26,000 on the upside, then we can expect a directional up move. And again, repeating the support levels 25,370 and 25,240. These are the important levels to watch out for as a support in the Nifty. As far as oscillators and indicators are concerned, they are trading and placed neutral right now. There is no much movement in the oscillator indicators. They are placed in a consolidation phase. So once we take out some important resistance, definitely this will come in favor of bulls only. So let us see how it goes. But these are the important levels to watch out for the Nifty. Now let us look at the longer time frame on the Nifty. Now this is a monthly line chart of the Nifty. And as we all know that in September 2024, there was an all-time high formed. And after that, we saw a significant correction towards 21,700 level. So this was a major correction registered after September 2024. After that, it recovered, and in June 2025, it made an intermediate high around 26,000. So this was the lower high after this September 2024. If we adjoin this downward sloping trend line from this top to June 2025 top, the breakout was seen somewhere in the month of October, November 2025. So this was a breakout and confirmation that Nifty wants to go up. And this was a breakout was registered. And after that, we saw Nifty made an all-time high around 26,371. So after this breakout, it went up, but could not sustain it higher level and again came down. Now we can see that in the January 2026, this was a throwback fall. So many times it happens that after giving positive breakout, it used to give some retracement. And this is nothing but the throwback. This is nothing but the retracement after the breakout. And it found support around that level only. We can see that on the monthly line chart, Nifty found support on this trend line and bounced back. So on the monthly basis, Nifty is up by almost 1%. So it is trying to take support over here. So validity and the positive implication of the breakout is still remains there. And there is a good chance that it will resume the uptrend from here only. If we were to see any close below 25,200, which will be violation from this trend line, then there will be a worry for the market. But as of now, it is not looking like that. So 25,200, 240, where 200 days average is also there. This trend line support is also there. This level needs to be tracked closely on closing basis. If it is not breaking that, there is a good chance that we will make an all-time high after that. So this is a positive development, breakout, then retracement, again resumption of an uptrend. So important level to watch out is 25,200. Right now we are placed at 25,571. So around 300, 350 points cushion is there in the market right now in the Nifty. Now let us talk about the Bank Nifty. So Bank Nifty is clearly outperforming. It is placed recently. We have seen that Bank Nifty was at an all-time high itself, and this was the weekly price pattern on the charts. So this was the consolidation. This we called in technical terms a box pattern, where multiple bottoms at the same level, multiple tops were at the same level. And this week itself, Nifty closed with a gain of 1.64%. So this is nothing but the breakout from the consolidation, weekly consolidation. Last 10 weeks consolidation has been taken out with a good volumes, and indicator oscillator also is showing some good strength. So outperformance was there, and we can expect further outperformance in the coming days. And so recent high was around 61,700 in the Bank Nifty spot. If that is taken out, then we can expect this box breakout confirmation, and we can head towards 63,500 to 64,000 as well. So the recent high is 61,700, above which we can expect 64,000. The important level, support level for the Bank Nifty is placed around 59,800 to 60,000. So this is the important support band, which Bank Nifty should not break this level to hold the primary uptrend. So these are the important levels, and yes, we are expecting Bank Nifty to perform well considering the technical setup. Now, also let us also discuss about the small cap and micro cap indices. So, friends, we all know that this broader market participation is clearly lacking right now. Only large cap stocks are able to perform well and see the breakouts and follow up buyings, but somehow liquidity is not there in the mid cap and small cap segment. I would rather say small cap and micro cap, which are not the part of F&O, but the cash segment, which retail guys and mass public used to hold it in our portfolio. So that is where the concern is right now. We can see that these are the different moving averages, 20, 50, 100 and 200 days moving averages are there. And Nifty small cap index is clearly placed below this level. That means the relative strength is not at all there. It is quite vulnerable. It is trying to protect the gap support which was there previously. So these are the trend line, important trend line, and we can see here that it is placed at near strong support. So small cap index is placed around 17,000. There is a strong support at 16,800. If small cap index breaks this level, then there will be a fresh breakdown. So it is placed quite vulnerable right now. So we have to participate in the large caps where we can see relative strength, but small caps are really struggling. They have to give rise enough to confirm the breakout on the upside, but right now we can't see the strength coming to the this particular segment. So we have to be cautious right now. Better to stick with the large caps as of now, looking at the technical setup. Now this is again a broader market index, which is micro cap 250 index. Here also we can see that it is placed below the 20, 50, 100 and 200 days EMA. And this is a gap support which is acting as a strong support right now. But it is a clear cut struggle we can see from the micro cap index, not able to break out and surpass the crucial resistances of moving average. So though there has been some gap support and trendline support, we need to see whether it is able to give respect to the supports and bouncing back. So better not to anticipate any bottom, better not to go against the trend. The sectors and stocks which are showing strength, better to stick with that. That is what we can see over here. Now talking about some sectors which are performing really well. One of the sector is CPSE. So this is nothing but the PSU sector index, which is where we have the most of the PSU power stocks available. Some defense stocks like BL is also a part of this in particular index. So this was a clear cut consolidation box pattern was there. And couple of weeks back, we saw a breakout. We came out with a recommendation on ETF also on CPSE. This was a breakout which was registered, and you can see that this is clearly outperforming, and continuation of breakout is also there. So some of the stocks which are with the positive bias technically from this particular segment is the NTPC, Power Grid, Bharat Electronics, NLC India and Coal India. These are the constituents of this particular index, and these are placed very strong on the charts, and they can outperform the CPSE as a whole overall index also. So indicator oscillators are clearly showing strength. So we are having a bullish view on this particular index, which is Nifty CPSE index. Now this is one of the index which represents the energy space. So this is a Nifty energy index. This is the weekly chart of Nifty energy, and we can see that adjoining this previous swing highs, there was a clear cut resistance from this trend line coming here. And we can see that on weekly basis, this trend line resistance has been taken out. So this is a clear cut breakout. Now, what does it mean? So we have to see which which stocks and which constituents are part of this particular index. So Nifty Energy Index is having some stocks like Power India, ABB, NTPC, Torrent Power, and ONGC. So these are these sectors which are continuously doing good. We know that PSU banks as well as the metal indices are already performing, and after that we have seen some new sector emerging as an outperformer, which are nothing but the PSUs, PSU power stocks. They are looking quite strong. So power as a sector has started participating and outperforming the other sectors, which needs to be seen and it needs to be give respect, and some positions can be taken in the portfolio as well, looking at the relative strength of the index. So energy index, power index, PSU banks, PSU sector, as well as the metal sector. These are the sectors in which we have a bullish view technically. So I would like to conclude over here. So overnight cues are positive from the global markets. Even US markets also saw some recovery from the lower level after the Supreme Court announcement there. And GIFT Nifty is up by more than 300 points. Nifty has been passing through the choppy phase. So friends, we are still in a choppy phase. We need to take out the 26,000 resistance decisively to come out from this choppiness. Resistance band for the Nifty is at 25,885 and 26,000. Supports for the Nifty are seen at 25,370 and 25,240. Bank Nifty is relatively placed stronger on the charts, above 61,700 in the spot. Index could move up to 63,500 to 64,000 resistance band for the Bank Nifty. Support for the Bank Nifty is placed around 60,000 odd level. So small cap and micro cap, as we have discussed through the presentation in the chart, that they are placed relatively weak on the charts. They are placed below the moving averages. So we have to remain underweight unless we get a breakout on that. So right now your concentration and focus should be more on the large caps and the index based stocks and top 200 stocks. So let us wait for the decisive moves in the small cap and mid caps. Then you can come aggressively and participate. But as of now, it is not looking like that. So large cap stocks looking more strong, as I said, from the sectors PSU, energy, PSU banks, power and metal. These are the sectors which we like technically, and we can expect some outperformance continuation in the coming days also. So concentrate in this particular space to have more alpha in trading. So the strategy for the Nifty would be like Nifty longs can be held with the stop loss of 25 to 40, which happens to be the 200 days average as well as the monthly line chart trend line. On the higher side, if Nifty sustains about 26,000, then we can expect a new all-time high, which happens to be, this is the, I would correct here, this is 26,340 to 26,400. So 26,340 to 26,400 going to be a next resistance about 26,000. Till then, stock and sector specific bullish moves we can expect, and let's participate in the stocks and sectors which are relatively doing well, and we will come out with the recommendations and sectors, ETFs as well as the stocks on a MTF basis when we see some participation coming and breakouts are getting confirmed. We will try to come out with a more and more recommendations in the MTF as well as the derivative side. So this is what I wanted to share. Now I would like to invite my colleague Subhash Gangadharan, who will be speaking on derivative developments on Indian markets. Subhash, over to you.
Yeah, thank you, Vinay. Is my presentation visible?
Not visible. Ravi, is it visible to you? You can share again. Now it is visible. Keep it in presentation mode.
Okay. It's visible, right?
Yes, it is visible.
Okay.
Keep it in presentation mode.
Yes. Yeah, so good morning, everyone, once again. So I'll be giving a brief overview on the derivative outlook. We will look at the open interest data, then we will look at the option analysis. We'll also look at the FI data, how they've been building positions in the index futures, and then we'll come up with the outlook. So coming to the open interest data, the data shows that there has been long buildup in Nifty futures during the week. There was a 1.5% rise in open interest, and the Nifty rose by almost 0.4% week on week. Similarly, in the Bank Nifty also, there has been a long buildup of positions. There has been a healthy buildup of open interest of 24%, while the Bank Nifty rose by 1.64% week on week. Now, coming to the open interest data, there has been healthy call writing in the 25,800 to 26,000 strikes. which indicates immediate resistance at these levels. As you can see on this chart, 25.8 to 26,000, there is a good open interest built up in the call side. Similarly, on the put in the put segment, there is good put writing at 25,500 to 25,400. As you can see in the chart, there is a good build up here, 25,500 to 25,400. So that is the immediate support, and it also indicates that downsides could be limited for the near term. A move above 26,000 could lead to the Nifty rising to new life highs of 26,400 to 26,500, where there is again heavy call open interest buildup. As you can see on this diagram, 26,500, there has been a good buildup of open interest. So that is a strong resistance. So if the Nifty does manage to cross 26,000, then we can expect a rally up to 26,500. Now coming to the FI data, there has been a long build-up by FIs in index futures segment. They were net buyers to the tune of 2,444 crores, and open interest increased by 29,285 contracts. Now, if we are to see the breakup, there has been long build-up in both the Nifty and Bank Nifty futures. So that is a positive sign. In the stock futures also, they have been building long positions as they were net buyers to the tune of 1,538 crores, and open interest has increased by 1,46,000, almost 1,46,000 contracts. The FI long to short ratio has also been rising in the last 1 week, and it is now at a 3-month high. So that is again a positive signal. Now coming to our outlook, considering the long build-up in the Nifty futures, long build-up in the Bank Nifty futures, and FIs also have been building longs in index futures, and FI long to short ratio has also been rising, and it has touched a 3-month high. So all this is suggesting that markets could move higher, but the crucial resistance is at around 26,000. So only if the Nifty can convincingly cross 26,000, only then one should aggressively go long. Otherwise, one can adopt a selective buying approach. On the downside, we have a put writing at 25,500 to 25,400 levels in the 24th Feb Nifty expiry, which indicates that downsides are limited for the near term. And the move above 26,000 only could lead to a Nifty rising to new life highs of 26,400 to 26,500. So only if there is a convincing breakout above 26,000, in that scenario, we could see the Nifty rising to new life highs. Bank Nifty also is looking bullish and could rise up to 63,500 to 64,000 once the immediate resistance of 61,500 to 62,000, where there has been healthy call writing, is taken out. On the downside, we have immediate support at 60,000 to 59,500, where there is healthy put writing. Now that's all from the derivative side. Now we will open the Q&A. So if you have any queries, you can please ask us.
You can write down your query in the chat box. We'll be more than happy to answer your queries. You can this screen showing screen, Subhash.
Yeah,
stop sharing.
Stop sharing. Yeah.
Yeah. So everybody, you can ask question, whatever you have in your mind. We will not be able to comment anything stock specific, but we'll be more than happy to answer on the sector development, on the index development, as well as the global market development and ETF related questions. So yes, we are here to answer you. You can ask any question to us. So first question comes here from the Shreyas Shah, asking about now what will be our view on the IT sector. Subhash, do you have any particular view on the IT space or on the derivative perspective?
Yeah, IT sector is looking weak, so one should avoid that sector for the time being. It is actually one of the weakest sectors in the market currently. If you look at the weekly chart, it has broken the previous intermediate low made on 3rd of October. 2025, and now it has been moving down consecutively for the last 3 weeks. And momentum indicators are also in decline mode. So it's a sector to avoid for the time being.
Okay, so technically it is looking weak as we all know, trading near the lows, the recent lows, and we also know that many of the sectors and stocks are trading near their highs, 52-week highs, where Nifty is also not that far from the all-time high. So in the scenario where we have many sectors and benchmark indices making new highs, better to concentrate there and better not to look for the weak sector for the trading. It could be a good sector for the investors to accumulate for the medium to long term. But as far as short term trend is concerned, I think we believe that the trend is clearly down as the index is placed below long term moving averages. Now, the second view is coming on the PSU Bank. So basically Nifty PSU Bank, as I already shared through my presentation, this is the index which is at all-time high. We had recommended PSU Bank ETF from Nippon India PSU Bank B was there. We recommended as a 2026 ETF because we were expecting PSU banks to do well. We already given that recommendation yielded more than 10%, and that is still open for the second target. So basically large cap stocks are performing very well in the PSU segment. SBI, Bank of Baroda, Bank of India, Union Bank, Punjab National Bank. These are all outperforming and still looking a good continuation of an uptrend. So we can expect this continuation of an uptrend in the PSU bank. So we are bullish. Our recommendation is also yet to achieve the second target. So we were bullish and we are still bullish on the PSU banks. What is the war effect on market? Shall we buy or wait to add stocks now? So yes, geopolitical issues are still there. There has been uptrend in gold as well as the silver. Because of that, there has been up move in the crude also, which is also a negative factor for the Indian markets. So rising Brent crude is has also been concern. So we have to see how it goes and news comes out. But still in this phase, we are seeing that many sectors and stocks are participating. Though there has been negativity in the small cap and mid cap segment, but some sectors which are related to oil, energy, as well as the commodity related sectors are still performing well. So we have to be stock specific, sector specific, still we come out from these geopolitical tensions. Some sort of allocation should be there in the precious metal as well to hedge your portfolio. So we came out with a gold bees recommendation recently. In the past also we had recommended gold bees, HDFC gold and other Nippon India gold cells also. So this should be a part of your portfolio to hedge the risk of the global markets and geopolitical issues. So it will be there right now. No clarity emerges, and till now we can till that resolves, we can go and approach the stock specific, sector specific view. So somebody is asking view on the private banks. Subhash, any view on private banks since they are underperforming the PSU banks?
Yeah, they are underperforming. So you can avoid it for the time being because there is no, if you look at ICICI Bank, it is trading in a range. If you look at Kotak Bank, that also has been correcting in the last 2 weeks. So there is no convincing buy signal in private banks. So better to avoid for the time being until it shows some strength.
Yeah. Somebody is asking a view on the power and defense sector. So we already presented that power sector is looking extremely strong. This is the sector which has started outperforming after a long time. So old economy stocks have started doing well. So previously, as we said, PSU banks and the second sector was metal. After that, the third sector which has joined the bullish run is the PSU power stocks, power related power ancillaries also are doing very well. So our view on the power sector is bullish, and if market sustains, then power is going to give very good returns to the investor as well. So our view on the power sector is bullish. Defense is into a choppy phase. There is no clear cut trend emerges, but it would be better to stick to the large cap defense stocks which are technically looking stronger. And we came out with a CPSE ETF recommendation in which one of the stock which belongs to the defense space is the Bharat Electronics. So there you can concentrate. It is a part of defense as well as the CPSE index. So there you can concentrate and expect some outperformance. Say it, the other queries are coming. Like, so what is the view on infrastructure and construction sector? Subhash, any comment? Any store sector, any particular comment? You see any derivative development there?
Yeah, there is no major development there, so can avoid it. If you look at stocks like NCC, they are still in a downtrend, so one can avoid the sector for the time being.
So friends, infrastructure as a whole, if we look at the sector, the stock which is carrying the highest weight in the infra is the L&T. Now L&T, as we all know, it is trading at all-time high and continuously adding on to the gains. So as I said previously, that large caps are performing very well. The Nifty 50 stocks are doing better than the micro cap stocks. So L&T is the stock which belongs to the infra, and this is continuously giving good returns. That's why infra as a sector, as a index is not falling that much. But yes, the cash stocks, like many stocks are there which belongs to this particular sector, but they are not seeing any buying interest since long. So once we get some clarity in the micro cap and small cap and mid cap segment there, then we can expect these stocks to perform well. But those can be a good bet for the investors to accumulate for the long term. But as of now, there is no momentum in the most of the cash stocks. But yes, large cap stocks from the infra and construction are looking good to us. We will not be able to answer any stock specific questions. So sorry for that. It is against the compliance. So better stick to the sectors and indices only. We already shared our view on Bank Nifty and private bank sector. So no separate comment on that. We will continue to hold on to it. One last question we would like to take here is that what can we say? So somebody, Shweta is asking, what can be said to clients to invest as markets are falling frequently and drastically? So if client is investor, there is nothing to worry about it. We have to follow the recommendations which we are coming. If he is a trader, ask him to go for the our trading products. If he's an investor, ask him to follow our investment picks. If there has been some investment baskets introduced by us, and we have been giving pick of the weekend investment ideas, ask them to follow. And do not think for the short-term volatility. Do not worry about the short-term volatility. It will be there. Right now, after 4 years of bullish markets, we have entered into some consolidation in choppy phase of the market. It could remain there for next 3 to 6 months. But after that, if once clarity emerges, then we will be participating in the one-sided market. So this is the time to show some patience and accumulate the good quality large cap stocks to have in portfolio with a hedge of some exposure in the gold and silver as well. This is what you can ask your clients. So it is not like that we have to completely out from the market. We have to remain invested to get good returns. We never know, anytime a positive news can come and we can break out anytime also. So better to stick to the large cap stocks. That's what we feel. Selected mid cap stocks can do well, in which we will come out with the recommendations through investment ideas, the pick of the weeks and the baskets also. So this is most of the questions I think we have covered. Subhash, any ending comment you would like to share?
Yeah, so the GIFT Nifty is showing 300 points up. So, but one should not get too excited about it. Only if the Nifty can convincingly cross 20,000, 26,000, only then one should aggressively be buying. Otherwise, there is a good possibility that markets could again become range bound. So selective, look for stock specific opportunities and sector specific opportunities.
Okay, so here we would like to conclude. I wish all the very best for the coming sessions, and we will try to come out with the recommendation if market sustains, and we have a derivative product. If market is not sustaining, we will come out with a short recommendation as well. So all the very best to all of you for the next fortnight, and thank you very much to join this fortnightly webinar, and we will be continually coming out with market updates in our daily and weekly reports. Thank you everyone for joining. Here we would like to conclude. Thank you everyone.
Bye. Thank you, everyone.
Bye.